Hello folks, I'm L.A. Little and this is your daily TA Wrap, where we take a look at these markets and we do it from a neoclassical perspective, asking ourselves each day, what happened today and what does it tell us about tomorrow? I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the beautiful Rocky Mountains. Folks, I'm glad you could join me. I'm doing a show early again. Going to be out this evening, so taping it early. Market's just closed. It's about 2 p.m. East Mountain Time, 4 o'clock Eastern Time. So we'll have incomplete data in terms of the volume numbers, but we'll be able to compensate for that by looking at the ETF. So let's get started. Look at what happened today. It was really what we've seen previously. Not much has changed here. These markets just keep grinding away. We're not really getting any kind of pullback whatsoever. I was remarking in the trading room a while ago to the traders that what appears to be happening to me is this market is just slowly chewing away the supply line that's up there above the current price point. We'll look at that here in a second. Let's look at the ending numbers. The Dow was down 40.5, 16,373.5. S&Ps, they eked out a 1-point gain, 1844, almost 1845. Composite 17.25 higher, 42.43. The NDX 10 points higher, 36.27 and the Russell up 0.5%, 11.81 So as you can see, we're grinding higher on the OTC issues. That's important because usually they are the best ones in terms of when a market moves. You want to see those lead, and that is what's leading. They're at new highs tonight. S&P still can't get over it, but it looks to me like it's just a matter of time. Let's take a look at the actual charts here. We'll start with the S&P 500. So as you see here, another push up. This is 5 days. We're hanging at the top. Those 5 days, there has been no give back, and that's independent, or I shall say, it's happening even though the market earnings numbers that have been coming out haven't been very well, right? We saw bad numbers from IBM last night. We saw bad numbers again this morning with some others. The market just doesn't want to pull back. And if the market doesn't want to pull back, that means what? That means it's going to try to go higher, right? I mean, it's all about testing. It's testing this little area you see right here. There's 5 bars across. You're still hanging here. You tested one time that high. Remember, it had the volume, right? But it failed on price. So even though it failed on price, when you have volume up there, you're probably going to go back up there and try to test it again. The fact that it can't pull back, it won't stay in this big bar, that suggests to me that it's going to go the other way. So I would think that what we're going to see is we're going to see a breakout to the top side. And I think that's going to come potentially this week, but it looks to me like they're going to hang here, eat away that supply line, and probably break them out next week. So if you're on the short side, I would suggest you reconsider your position. If you're on the long side, I suggest you just be patient because it looks to me like that's what they're going to do. Let's look at the SPY. I'm going to pop to another chart so I can get the final numbers in terms of volumes here so we can see exactly what we got. It looked to me like a pretty slow day today. pull this in, give me 3 months, and this is the SPY. Yeah, it was very slow, 56.9. So when that's finally done, we'll have 60, 61 max. You can see how much contraction again on the actual volume numbers today. So volume is going to be nothing, it looks like. Let's see if the others look the same. So if we look at the triple Qs, and you see they pulled away today, so volume the same there, nothing there. Let's see about the IWM, and same thing, no volume, and the Russell, and oops, I need the IWM to get the Russell's volume, and also no volume. So no volume on any of these. But what we can see now that we go back to the TA2D charts, we can see that we're getting a nice extension now on the NDX, right? Pulling away. That's what you want it to do, right? You want this thing to just slowly pull away, and as it pulls away, it's going to pull the S&P with it, right? The listed issues are going to go. So if you're trying to decide which direction it's going to go, the NDX, the IXIC, the Russell, they're all telling you the same thing. You see it here, right? You got the exact same thing happening here, right? Nice extension, just pulling away. And you've also got it over here on the Russell, and you saw that on that Russell chart I brought up as well. All of them extending higher. What we have and what we've had is we have ABCD structures in place. I've pointed those out multiple times. On the Russell, for example, you got an ABCD structure here that measures up into this area. You also, if you think about it from a different perspective, you got a range breakout that's taking place already, right? If you extend that range up, you got a breakout that takes you up to what? Same place. Surprise, surprise, right? A lot of times you'll see multiple structures give you the same targets. That's what we have here on the Russell. We have it on the NDX. We have it on the IXIC. We're fixing to have it on the SPX. So what does that tell you? It tells you it's going to try to go higher, and that's probably the biggest story that's out there today. Let's look at the let's flip through what we normally do. Look at the major sectors, see if there's anything shaking there that's worth looking at. I suspect, given the low volume today, it's just going to be creeping higher. IYT got some volume into it today, it looks like, and popped up to a new high. The semiconductors traded down. Remember, we had Xilinx. That was another one that reported this morning. Didn't report well, but they bought it anyway. Intel disappointed last week. What happens? They buy them anyway. When you get bad numbers and stocks still go up, that's telling you the market, for whatever reason, has decided that it has to go higher. And if it's going to go higher, then you want to be on that side of the trade. Just trying to get up Intel here and see what it did today. Yeah, it's still suffering. Intel's the largest weighting in that sector, yet you just saw the sector itself wants to go higher. XLB was struggling today. This is, of course, the basic materials, and they came back in today, but you know, they were up there testing yesterday. They got a new high on volume. They'll go back up there again. XLE, energy sector was strong this morning. Then I saw it tail off some. Looks like it closed okay. So it finally got over the bar. This is a nice extension here. Remember last night we were talking about this bar being the resistance. It got over it, that large, wide price spread, high volume bar. Once you get over it, you can extend to the next one, and that's up in this area up here. Looks like the energy is going to try to extend a little bit farther. You're actually one more. It looks to me like it actually got past this one, did it? That top is 86.97. And the close is going to be at 87.07, so it's over it too. So that looks like that one wants to walk higher as well. So sector-wise, as I start flipping through these, they look like they support the whole ideal that I was talking about as I came on the top of the program, in that the market is going to try to break out to the top side. So XLI looks okay, hanging at the top. The XLF doing the same thing. Technology, I'm assuming, is going to be right at the top. We had strength in Apple again, as Icon, chatters about buying, I don't know how many more million shares he bought supposedly today. Apple's got earnings out next Tuesday or Wednesday. I think it's the 27th. Apple's setting up an ABCD structure. You've got a little nested ABCD structure here, right? If it can break over this, that extension will take it up to where? The resistance zone that you have up above. So that one looks, and that's 23% of the weighting in the NDX. If that thing moves, it's going to take everything with it. The other big weightings, Microsoft reports, I believe tomorrow. They're struggling. They're in a big range trade, and that one that still doesn't look any good. But Microsoft is a wannabe anymore. They used to be the leader. They're no longer the leader. The leader is Google. Google is out here pressing new highs day after day. Google's got earnings coming up, I believe, Thursday next week. So next week is when you get all the big earnings, right? You get the big companies that can move things. You had it with the financials to start out last week. They disappointed. You had Intel disappoint. You had, time after time, disappointments. Yet the market won't go down. If the market can't sell down on bad news, it's going to go up. Next week is the Fed as well. Let's see what the rest of these look like. XLP. So your basic consumer staples, those are the two weakest sectors. That and the utilities, those are both just hanging. And the utilities got up to test the swing point high today. With the doji, that's probably going to fail right there and come back. XLV, this has been the strongest sector, continues to be, just pushing. And a lot of that is biotech inside of it. We haven't looked at biotech. I'll pop it up. Let's look at the discretionary. Discretionary still looks weak overall. And as we looked at the XRT, you could see that. Let's pop up the biotech though, because these guys have been on fire. So ITB. Oh, and that's the home construction. IBB is the one I'm looking for. Yeah, look at that. Look at that extension. Let's put that on a weekly real quick. I suspect there's an ABCD structure to the upside. And it just completed. So you had an ABCD structure here. Right? You've had multiples, right? One after another. You had one here. That one completed. Right? That one created a new one. That one completed. That one created a new one. Right? And that one just completed. They're just one after another. That means this thing's probably going to pull back in here somewhere, and then it's another buy, and they'll do it again. Okay, so what else we got here? Let's go to, so sectors seem to support the idea that we were just looking at. Let's go over to our Ox market, see what bonds, the dollar, and so forth did, and see if there's any other clues over here that would negate the idea of these indexes trying to break out. Dollar looks like it's just biding time before it tries to break higher. I saw big strength in the USO and the UNL today. That's because of that big storm you got back in the east that's pressing up natural gas prices, pressing up the oil prices. I wouldn't be buying into this USO though. That looks to me like you'd be asking for trouble. Probably gets to the top of that 34.13 top on January 13th, or excuse me, January 3rd. Let me look at the UNG nat gas ETF. That popped out, brand new highs, volume expansion, and oh, look at this. So on a weekly, you actually have an ABCD structure that just took place, and that will take you past the highs. Remember, nat gas is one of those, and I know we got a member long in this, so that's great for them. But we got an ABCD structure here that just broke top side. There's your break. That projects way past that swing point high. Let me see. That's going to project. Let's get a number on that guy. So that's the low is 16, roughly 17. The top was about 22, so that's 4 onto this gets you about 23.5, and that top is 24. So it takes you, no, that's wrong. Something's wrong there. The bottom is 19, 4 is 23. Let me do it again. 17 to 22. That's 5. That's what I did wrong. 5 onto this takes you to 24.47, which is over that high, right? Takes you up into this little area right up here. So that looks to me like it's going to go up, test, probably break that top off this ABCD structure. So I wouldn't be selling out there if I was still long. Let's see about bonds. So bonds, contrary to popular opinion, do not want to die. They did trade lower today. So they were testing a swing high, 105.41. They had gotten over it yesterday. They'd gotten over it 2 days back. Okay, so this is a, we talk about retest regens. These happen all the time, right? And so now you have one happening right here on the bonds. And what you want to do with the retest regenerate situation is you want to look at it and use it as a mechanism to tell you something. What would it tell you? Well, if it comes down here and it can't hold and regenerate back higher, right? If it can't do that, that's suggesting to you that this is a big range trade, right? A failed test on a retest regen tells you you're in a range rather than regenerating back in the direction of the breakout. So in this particular case, right, if it fails here, then what does that do? That sets up a range trade back in this big range. So that will be an important test as it comes back, and that would be one to watch because bonds are going to have a lot to do with what the market does. If the bonds want to pull back, the market usually wants to go the other way, and it's kind of interesting here because that supports the notion, potentially, that the markets themselves want to go higher. Let me see. Let's take a quick look at junk bonds. We'll look at gold and silver, and then I'll go to your questions real quick. Okay, so junk bonds, new highs. You know, and I've been watching, we get a lot of trading signals on the TA Today trade signals. And those trading signals have been showing a lot of strength in the municipals, and you can see it here on the daily on the municipals. We've had multiple days here where these things have shown strength. Now, you always have to look at multiple time frames though, because if you look at the weekly, you can see all it is some sort of a bounce in a large range on the weekly. So, you know, you don't get all excited about it. It's tradable, but it's a trade. It's not an investment. It's going to go away. It's probably not going to last. These guys are still going to have trouble down the line. So if you're interested in that, yeah, it's tradable, but it's not a place you want to park your money for a long period of time. Gold contract trades flat. Now gold is still holding, and I don't know if it's going to be able to hold it here now. It's had a nice run, right? Gold had an ABCD structure off the bottom, right? That structure was here, and it just about completed. It wasn't quite done. It wanted to make it up to here. It didn't quite get there, right? Then you pop up 2 days back, looked like it was going to get up there. Back down, flat, can't do anything. The volume flows look fine though, right? All these volume flows look good. The problem is that this has been in a steady downtrend for a long time, and when you're in that kind of a downtrend, you know, that makes it very susceptible to coming back and testing lower price. So in this particular case, right, yeah, it had its run. If you traded it, great. Now you have to be a little bit more cautious because A, you don't have that much upside probably left, and B, there is more downside to it. And if you put it on the weekly and you look at the weekly, you can see what I'm talking about, because on the weekly you'll see that this has been a steady downtrend, right? It tested lows, couldn't break them. Now it got a little pop up. I wouldn't be surprised to see it come back down, test some more, and then potentially actually get a real bottom in place. But when you get a situation where something's been in a downtrend for a long time, and gold has, it's going to take a while for it to actually turn if it really is turning. It's just not going to happen overnight. So be aware of that, and it looks to me like this probably will try to come back before it's over here. All right, let's see what kind of questions you got out there for me. And I know it's early in the day, so I'm not going to have too many, but hey, some of the locals are on. Let's see what they got here. So first question is Coach. Coach reported earnings. Let's see what they look like. So I'll start with the weekly. So Coach is, of course, the handbag maker. They've been getting a lot of competition out of Michael Kors. Kors has been taking their business away. So you're buying this. And let me see. Actually, let me switch to the daily first because they reported this morning. Oh, man, they came down with volume, huh? Well, so I assume you're thinking, Zach, you're thinking that this is a intermediate term trade. I would hope you're thinking. So today is Wednesday. we had Monday off, so that's 2 days. 2 days it did 1.9, so it's about 1 million a day. Assume you're going to get about 7 the next 2 days each. That's going to be about 3.4. Divide that by 5. Divided by 4, that gives you about 9. Times that by 5 is about 4.5 million on the weekly. And this bar has 36. I'm doing something wrong. Oh, it's 31. Okay, no wonder I can't read. Now let's do it again. So 32 million. That's 16 million a day. 16 million, if I just assume the same numbers, that's going to be what, 64 for the week. So that's about this. Yeah, the volume's going to be heavier. So that low probably isn't going to hold. Let's see what the monthly looks like. Okay, you got to be careful here, man. This is not a good situation. Okay, you got a swing point low here, right? And you got another one over there on your monthly, right? So you got 2 of them lined up. You know what multiple swing points on multiple time frames will do to you. So you got 2 swing points potentially to break on the monthly. You have 1 to potentially break on the weekly. You have another one to break on the daily. All those swing points breaking together, that's going to lead to a fast move to the downside. I would be very careful here, because if this can't hold, this is a dangerous setup. So it's not something I would buy. That's my opinion. Let's see what the next one is. Youku. So Youku, this is an internet provider out of China. Let's see what they look like, if I can type it right. YOKU, right? Well, let's pop to another chart. Looks like something happened there. I don't have it up, so let's go to this one. Alright, so what are these guys doing? When do they report, Federico, if you know? Because you want to be careful here on your earnings, of course. So you've got a nice anchored support zone in here. Came down with 3.9 today. You got lots more volume there. Let's put it on a weekly, see what that one looks like. Yeah, it still looks okay. And that would be a retest regen, wouldn't it? 1, 2, 3, 4, 5. No, it wouldn't. So it's just a support zone. Yeah, that doesn't look bad. That looks like a good area. I don't know when your earnings are, but assuming the earnings are farther out or have already reported, a retrace into this area is probably your buy zone, right? Back into here. That's probably where you ought to try to buy it. So you'll get a swing point low break here, but it will come back into some major support, which is a place that you could actually take a position. You have to realize that's a deep, it's deep here, right? This is wide, so your stops, if you put them up higher, your probability of success is going to be lower, or you have to take a wider, you have to take an intermediate term time frame look at it and put stops much lower to bring your probability of success up. So that's the way I would look at that one. Next one, GPRC. Let's see what we got there. So GPRC, let me pop back in here. Bear with me a second. GPRC. I'm not familiar with this one. Who is this? GPRC. Recycling company. Is this, let me see, they're in the industrial sector. So is this like steel probably? Looks like it. So the steel sector has been doing pretty good. This is a nice looking chart. Here's your weekly, right? You got nice volume extensions on the way up, right? Wide price spread bars. That's all good stuff. That's what you want to see. Now, the only thing that might be a little concerning is you went back over that high, right, with less volume here, right, compared to this. So that's a failure. Comes back. Now it's coming at it again. Volume's still going to be light this week comparatively. So if you're wanting to buy this breakout, which is I assume what you're looking at, you want to look at your earnings and make sure you know when those are, but you want to see it get over this bar. That's the key bar here. So that date on the weekly is the 14th, October. So you got to get over the October 14th high and stay over it to make that breakout stick. And you got a December 5th bar that's 349. That October bar was 322. So I would even hold off and make it break over this one, because if you can't break over that, you're not going to get the extension. And in this particular one, in this particular stock, if you break over it, you're getting nice fast extensions. So make it break over it, then take your position and put your stops right underneath and don't give it anything. And that's really the way you have to trade something like this. Let's look at the next one, NBS. So NBS is, get this one in real quick. See what this one looks like. And when I get done here, I'll flip over and take a quick look at earnings after the bell, see what they look like. So NBS, Neil Stem, is this a biotech? Looks like a biotech. Yeah, it's in the IBB sector. So yeah, I don't like this one. This one has a problem here, right? The issue here is this bar right here. So if you're trading this or wanting to trade this, you gotta make it prove that it can get over this bar. That's the January 10th bar. And the reason I say that is look at the volume on it as it came back down. Now the only reason it didn't break it out is because it came so far. It break out the bottom is because it came down so fast so far. Now you're getting to push back up and you have less volume, right? So consider what you got, right? You go up, up, big volume, right? What do big volume spikes do? They typically set up ranges, especially when you can't extend afterwards, which is kind of what this one has done, right? So the range is this area. Well, you're at the top end of the range now, right? Trying to test the breakdown bar, right? Even if you get over this thing, right? Even if you get up here, what's your potential extension? Well, you might get back to the tops, and you might have actually even break out. I mean, that's possible, but you know, you've got to make it prove it can get over this bar, because if it doesn't, what is it going to do? It's going to come right back, and then you have the potential it's going to actually break it down. So this one is a no-no right now. You got to let it tell you a little bit more before you decide what to do with it. I'd make it break this bar and hold it. And if it does, you know, then you're going to have to, you know, you're going to have, the problem is your probability of success is going to be low, because you're going to have to put a stop real close. In a stock like this, it's going to jump around and you're going to get thrashed out probably. So, you know, this one I don't like that much. I just don't think your trade setup is that great on it. Let me see. S-Bucks. Yeah, S-Bucks has earnings tomorrow night. The thing with S-Bucks is this is Starbucks for everybody out there. Starbucks has been trading down into earnings, and earnings tomorrow night. The trade here is you've got weakness coming into earnings. Now it looks bad when you look at the daily, but if you take a good close look at what's happening, you've got a push down, right? ABCD structure, and it completed, just about completed. And the key thing here, and actually this chart looks like it's from yesterday, not today, the key thing here is that you're coming back into a big wide price spread high volume bar, which is anchoring the support zone on a stock that's been extremely bullish. So a while ago we were talking about, you know, when you have a situation where stocks are bearish for a long period of time, it takes them time to turn around. Well, it's the same thing when you're going the other way, right? If it goes straight up, it's going to be hard to break it down. So what you're going to get is you're going to get a situation like this where it comes back, right? And then even if this thing has already got its top and that's it, no more. If that happens, it's still going to take it a while, and it's going to bounce back up there and try again. And then maybe it fails and it really breaks down. But you've got the time, right, to potentially get into a trade that may actually be a long-term position you can hold, and you get it on the cheap, right? You get it $10 cheaper than you could have got it when it was actually going up. And your probabilities are pretty good. So Starbucks set up pretty well for tomorrow. We'll see what the earnings do. The key will be this big blue bar you see. That date, I'm on the weekly, is the December 9th bar. That will be the bar on the way back. First getting into it and then getting over it. You get over it, it's going to be new highs. You get back into it, of course, you'll probably get to the other side of it, and that's what the trade is all about. Let's see. We got one more. I'm going to take one more real quick, and then I'm going to pop over, look at the earnings after the bell, and I'm going to be out of time. Actually, I'm already out of time. You guys, I love you asking questions. Y'all keep me busy, but I don't get to everything, do I? APC. Let's see what this one is. This is in the oil sector. This is Andarco. I can never pronounce the name. Looks like they got whacked pretty good on high volume, and now they're crawling back up to close the gap. Once you close the gap after a big push like this against you, usually the odds aren't too good that you're going to go very much farther before you get some sort of a retrace. That retrace would come back to the support zone you see in the green here. That's where you ought to be looking at it if you want to buy it. And the reason for that is because that's where this big bar has a top, or actually the top is a little bit higher, but it's down in here on that one. Let me get that drawn in right. So, well, hang on a second. I got too many screens going. There we go. So what you're looking at on this bar is the top is here, right? So your stop's going to have to be down here if you want to buy it. What you want to do is you want to buy it on a retrace back into support. You know, if it just goes higher, it goes higher. You go find another trade. You want to wait. Right? When something's been weak, you want to wait, you want to catch it lower. But let's look at the weekly before we decide it's something we want to do. So here's the weekly. And so, okay, so usually what you'll see with these kinds of trades is you're going to see this thing climb back up, right, before it's over. And still, it would be a retrace back to that little support zone we were just showing you on the daily. And then climb back up to the top of this bar. That bar top is 87.28. And then the bottom falls out again, right? It goes right back down where it came from because you got a high volume bottom down there that eventually they're going to come back and test it. So if you're thinking about this, yeah, you can trade it, but it's one of those things you got to get in, you got to get your money, you got to get out. The real risk in this is overnight risk. In other words, you come in, you wake up the next morning and boom, you know, some new news is out and the stock just drops out of nowhere. So when you're trading something like this, it needs to be, timing has to be right. You got to have a tight stop. You got to make your money. You got to get out. There's probably better trades. If you trade it, that's the way you got to look at it, in my opinion. All right, I'm out of time here. Tomorrow, you know, in terms of a wrap up, tomorrow's Thursday and we got Friday. We got no big earnings. I didn't get to catch the earnings. Let me take a sneak peek over here and see what they look like on the earnings board. eBay is making a big run, it looks like, and Netflix is making a big run. So that's going to help the NDX after hours and tomorrow. Let me take a quick look at eBay and then I'll wrap it. Because eBay was in a big consolidation. So this is the daily. Let's pop it to the weekly. eBay's trading at 58 3/4. It's popping the top. Yeah, it is. Wow, so eBay's going to break out of the range. This is kind of a big news item. eBay is a big heavy weighting in the NASDAQ, right? About 6%, I believe. Well, actually, it's less than that. It's about 4%. Yeah, this is a big thing. So eBay must have reported good earnings on the Christmas shopping season, would be my guess. And I'm sure their PayPal division did well. That's an ABCD structure. Look at that. ABCD, where does it go to? Right where it's popping to after hours. So what's probably going to happen is this thing's going to pop up there and not going to be able to go anywhere. Drift back in, give you a retest on all those swing points you see up there, and then that would be your buy, an after post-earnings buy. And it looks like it's set up pretty well. Hey folks, have a great night. Thanks a lot for joining me, and I'll leave it at that. And see you tomorrow. And we'll do it all again. Have a great night. Take care.